Hello everybody, Craig Hegstrom from Commercial Insurance Services Group. A little bit about myself. I've got a bunch of these happy acronyms that insurance folk have that are kind of a long list. I'm an ARM, Associate in Risk Management, CIC, Certified Insurance Counselor, LIC, Licensed Insurance Counselor, CAWC, CAWC, Certified Authority in Workers' Compensation. That's a hard one. I think they made that too long. I've been doing this for a long time, and we're trying a new format today where we ask some questions and answers generally about the commercial insurance business. So let's get started.
Hey Craig, this is Todd Barr. Just a quick question. I wanted to know if you've heard of any big changes coming in the insurance industry that we should know about, or that I should let my clients be aware of coming down the road.
Thanks for asking. One of the biggest things that's happening in the industry today is called social engineering or cyber fraud, and CEO fraud, I guess, would be a better form of it. So what happens is people hack into your system, they study your company, they pick up on the verbiage of the company, they understand your products, they wait till a Thursday or a Friday afternoon late in the day, they copy a CEO's email, they put the company logo on there, and they say to the CFO or the controller, transfer $500,000 to this account today. Well, it's late in the day, you're tired, and you're stressed because it's your boss's boss. You got to do it right away. And you send $500,000 to somebody in Russia, the Ukraine, that pretended to be the CEO. Then you call your insurance agent, and you say, hey, Craig, am I covered? And I say, what happened? Oh, my controller just sent $500,000 to some guy in Russia. Gee, I'm really sorry. I guess that's excluded. Well, didn't you tell me about that? So that's a really big item. There are 31 companies now in the United States that sell cyber CEO phishing with a P insurance. And of the 31 companies, only 8 would cover cyber fraud like that. Of the 8 that would cover it, have an exclusion that says if an employee willfully sends the funds, no coverage. So there's now a product out of Lloyd's and London Syndicate called Beasley where you can purchase this for a large fee. 9 out of 10 agents don't know about it. 9 out of 10 companies don't know about it. We try to talk to all our clients about it.
Thank you.
Craig, as our colleague David Clark would want to know, as a business and building owner, is there any self-assessment process to determine if you are adequately insured, or is it dependent on consulting with an agent, such as yourself?
Well, that's kind of a broad-nosed question, I guess. It would depend on what your assets are, what your risk tolerance is, and how much you want to self-insure and take. So if you're in a really good financial position, you got a couple $1 million in assets, you might not be worried about the value of the building. If you just bought the building, you're highly leveraged, you might want to make sure that you got 3 or 4 million or the right amount if there is a fire. If you're highly leveraged and you got a bunch of employees in a large organization, you might be concerned about things like employment practice liability, wrongful discharge, harassment in the workplace, and that goes on everywhere we are. If you're not so worried about it, you got 3 or 4 folks, you don't have any turnover, you probably don't want to buy it. So at the end of the day, there's so many variables, you probably have to talk to your agent.
Okay, thank you.
Craig, this is Bruce Finsilver. What are the problems as both an individual and a businessman if your computer gets hacked and someone steals personal information on your clients, your customers, or your friends? Are you covered for this anywhere?
Probably 95% of the commercial clients are not. It again falls into that cyber liability envelope or umbrella. Cyber liability will pay to notify your customers that there has been a data breach. Cyber liability will pay to have a PR announcement and defend the data breach. Cyber liability will also pay for any loss those people have, so it's kind of a 3-pronged approach. Again, there's about 31 companies that will write that. Those incidences are almost always covered, as opposed to when the employee gave the things away. Some of the small office products, like we write for some docs offices, throw a little $50,000 tickler in there for that. But if you really want the policy, you need $1 million limits. We gotta sit down and fill out an application. Client has to understand what controls you have and firewalls are up, so they can't get the data easily. And it's probably the biggest new thing going on.
Craig, just to follow up on that, does that cover HIPAA? If I'm hacked and patients' names get out there, and if so, am I? Am I covered?
The medical profession is probably one of the biggest and was one of the first to pick that stuff up. Some of those policies will cover the HIPAA piece, some won't, but it'll still answer a lot of the data breach problem either way. And based on that piece, we would just make sure that the HIPAA was included in that when we negotiated the deal. Good question.
Craig. Matt Mazurkowicz. As a contractor wishing to purchase and flip homes, what type of insurance should a person have for that?
Interesting question. We get those all the time. What typically happens is you buy your first house and you're just gonna do some minor work. So you don't get an insurance policy and you change the paint and you call Steve and put some new flooring in and you make a few $1,000 and you roll on. Then you start with another one and you add a bathroom and then, oh gee, you got 4 or 5 of them and now you're doing a $100,000 addition and now you're hiring a general contractor. Now you got a problem. So we tell all our clients that you need to get a certificate of insurance from any contractor that ever works on any house you hire. And you need to buy a general liability policy as a general contractor, because you in effect now are hiring a bunch of independent contractors, the plumber, the electrician, the this, the that, the roofer. And you gotta get a certificate of insurance from them saying that you're an additional insured on their policy, so when their guy drops the hammer from the roof or the sun falls down in the sky, it's not on your insurance cost, it's on theirs. The other thing you need is a builder's risk policy for the property piece. So a builder's risk policy covers the cost of the remodel, $50,000, $100,000, $500,000, the cost of the new construction, $1 or $2 million, and any material that might get stolen from the work site while the work's in process. Good question. Anybody else? Who's next?
Who would be a good referral partner for you?
Who would be a good referral partner for me? Accountants are very good referral partners because they're dealing with people's assets, and we protect assets. And they like a good insurance person because a lot of business owners don't understand business interruption insurance if there is a big problem. And so accountants are great referral partners. Personal insurance agents are great referral partners. We send some of our stuff, or a lot of our stuff, to the personal insurance agent like Jordan. He does a really good job, got a very great company, the biggest one there is. He sends us some of his problem accounts. We usually end up with somebody who's got a problem, and we usually can solve it. And life and health guys like Bruce are great referral partners because they're dealing with people's assets again. Large life insurance policy for the president or CEO, and he needs somebody that he trusts, you know, your trusted choice agent, to look at all the assets. So those would be probably the 3 best.
Craig, actually just one more question. Do premiums go up with any claim or only certain types of claims?
So that can be answered many ways like all the rest. If you have a policy that, like a personal lines policy with Jordan, and you're hit while parked or something, there's probably no increase. If you have, you know, the accident forgiveness and you have 1 claim in 4 years, probably no increase. If you're a commercial client and say you pay me $50,000 a year and you have $10,000 a year in claims, you got a 20% loss ratio, the company's gonna love you. It's not gonna go up. If you have a $100,000 claim and it's only 1 and you only pay $50,000, it might go up 5 or 10%, but probably not gonna go up. But if you have 5 $5,000 claims, it's gonna go way up. Because the underwriter is way more concerned about frequency than severity. You buy insurance for 1 or 2 big hits. If you're having 5 a year, you got a problem, and pretty soon all 5 will be big. That is gonna go way up.
Thank you very much, Craig. We really appreciate it.
Thank you.